and very warm welcome to this edition of the Mutual Fund Eye. My name is Vandita Shivle and I'm here to take up your queries. Well, this query is coming from Pulkit Banerjee and he's from Kolkata, and his question is, how do I invest in crude oil? Right, so that's a question coming from Pulkit. This question is in back of mind of, I think, almost every investor now, because we know that there has been a massive drop in the prices of crude oil. Right, it's a once in lifetime offer. A lot of people are even saying that. So a lot of people want to invest and use this as an opportunity. Now, Pulkit, your question is, how do I invest in crude oil? See, crude oil is a commodity, right? And it works on the mechanics of supply and demand. Plus, you cannot buy a barrel of oil, right? That's not possible. Like you can do gold, you can buy physical form of gold, but buying a crude oil is not possible. So what do? The various means by which you could invest, or any investor could invest in crude oil, right? You can do it via futures, but when you do it via futures, you need a very good amount of capital, right? You need a lot of money to invest via futures, and secondly, you need to have extremely good knowledge about trading. You must be a good trader in order to do it via futures, right? That's the most important thing when you invest via futures. uh, Other than that, how you could invest, there are better means of investment according to me. You could invest in companies which use crude oil as a raw material, right? You could invest in those kind of sectors. You could also invest in mutual fund companies. You could mutual funds which has whose portfolio is having these companies. You could invest via ETFs. So there are other means of investments when you want to invest in crude oil. That's my only thing. Now, in order to understand it better, that when will it revive, why the prices are down, let's try to understand the gist and how crude oil prices really work. It works on the theory of supply and demand. Why? It's a commodity. Any commodity works on this principle of demand and supply in the market. Right now, if you look, because of the lockdown, because of this COVID-19, this particular pandemic which is affecting the entire world, right? Because of this crisis, the demand for crude oil has gone drastically down, and because of that, there are a lot of, it's getting produced and produced, but there are no buyers. You just can't, then there's no one who's going and buying crude oil, and because of that, there are no places where we could store this crude oil, and because of that, the prices have drastically gone down because they want people to buy. Okay, so you need to understand this demand and supply thing. When there's ample demand in the market, the commodity prices will move up. When the demand goes down, the commodity prices tend to go down, right? That's how it works. And that's what is happening with crude oil. For people who really work with this trading industry, who like to trade via futures, this particular commodity, they would be aware that the May contract, of crude oil, that is in negative right now. The future contract, that's in negative, and because of that, also, the spot price is positive, the international spot price. But other than that, the May future contract, that's negative, and because of that, a lot of buyers, they need to settle a lot of things on the expiry date, and they couldn't settle that because either they have to book the losses, or they could take that in physical form at whatever price it is available. If they have bought it at $20, and if the prices are really down, which are showing right now, if you look at the May future contract, they need to buy it in physical form, and they need to store it. Now, there are no places to store, right? And because of that also, the prices are the demand has gone down, and the prices are really low of the crude oil prices. But if you look at the June future contract, then it is positive. It's still positive. Now, what is going to happen next? Is it good for Indian economy? These are the other questions that would be in mind of any investor right now. So let me tell you this clearly, that it's a very good news for Indian economy. Why? Because we are the net importers, right? And right now, because of the prices of crude oil, our foreign deficit could also improve. And also, since we are importers, it's very very good news for Indian economy. Now the next question, a lot of people will think the crude oil prices have gone down, but why the petrol and diesel prices, they're still high? What's the reason? See, the reflection would not happen immediately, right? As I told you that we are net importers, number one, and other thing is that it will take time for the price stabilization. Yes, the prices will get stabilized of the petrol in the midterm, but it won't happen just immediately. Okay, and if you're thinking it's 80 rupees right now, it'll just go down to 20 rupees, that's not gonna happen, right? It's gonna happen in a different way, but it will not go down to 20 for sure. And other thing is the taxes on petrols are really high. So definitely there won't be a drastic drop in the prices of petrol. That's for sure, because of the taxes as well. You need to remember that. Right, so now the next thing, what is gonna happen next? One more thing is gonna happen. The production of crude oil will stop from now. Why? Because US has spoken to the oil producing companies, the Middle East companies, and they're planning to stop the production for some time. Why? Because obviously there's so much lying, they need to clear up the inventories, right? So that's number 3. Now, how you could invest and which are the sectors that you could invest, what are the sectors which are positive and which are the sectors which are negative for when you plan to invest in stocks of such sector, energy sector. So I would say you should stay away. See, I'm not giving you any stock specific advice here because I don't like to do that. You need a lot of fundamental analysis. You need to do extreme amount of fundamental analysis plus technical analysis when you invest in such cyclical companies. But what I would still suggest you is, I would still tell you which are the promising sectors. For example, when you talk about oil producing companies, I would say Oil India and ONGC, just say no to those companies. The reason is because the cost of making oil, that's really high. And I don't think these are as an investor, investing your money in these companies would give you any kind of good returns, at least in near future, for sure. So if you're ready to keep it for 25 to 30 years, things are different. But I don't think it's a great means, if you're looking for 5 years span or 10 years span, then oil producing companies, I still say that just stay away from those companies. I'm little bearish on that front. If you talk about refineries now, the certain companies like Reliance Industries, HPCL, BPCL, for short time, it might go negative, but other than that, these are good companies to stay invested in. Look at the cash flow, but just don't invest in that because the crude oil prices have gone down and it's short term negative, but long time it's good. No, don't invest it in that manner. Invest in those companies wisely. Look at the market cap of the company, look at the cash flow of the company, look at the EPS of the company, look at the PE, look at the forward PE, look at the return on equity. Those are the factors. Now there's another important point that I want to mention here. Certain these are cyclical companies, right? So they work on up and down, those kind of ways. Now, if you really understand the concept of PE, for people who do this kind of fundamental analysis, sometimes PE doesn't work for these companies. Price per earning ratio doesn't work for these companies. Even in the quarterly and the annual reports, you'll see that PE is not mentioned of these companies. Why? Is it that they missed it? No, that's not true. Because if you know PE, right, how it works is, it works when the growth of the company, when the company has high growth potential, it's a high growth company, the PE tends to reduce over time. You look at the TTM, right, the trailing 12-month PE. It tells you the history. You look at the historical records, right? But also you need to look at the future or the forward P, right? And in order to do so, the company needs to be high in that high growth mode. If the company's year on year growth is 25%, 10%, then the P tend to reduce, right? And you'll see that there's certain companies, for example, even FMCG, where you have a lot of defensive stocks. The PE goes very high, but the PE which is high over there doesn't mean that the company is not worth buying. It's just that the growth is little slow, but yes, the company has potential to grow for that 58 years if the PE is 58. That's what I'm trying to say. But there are these companies, these oil companies, these cyclical companies. What happens over here is that there's up and down thing, right? When it comes completely down, right, the P is so high that they don't mention it. Now, in that case, is it not a good company? That's not true, right? You need to look at another ratio, which you could do, and that is enterprise value divided by sales. That's the particular number that you should be looking at. How do you calculate the enterprise value? You need to look at the market cap. You need to add the total amount of debt the company is having, and you need to subtract it with the total cash flow, right? That will give you the EV value, which is the enterprise value. If it is going high, then definitely it's a good company to go for. EV divided by sales is the number that you should be looking out whenever you are evaluating such companies. This is a very, very important parameter, and that is why I say that you really need very good amount of fundamental analysis when you are investing in these companies. It's not so simple. You need to look at the management, you need to look at the market cap, you need to see how the company is planning to work. Because when you invest in these crude oil based companies, crude oil, there'll be alternate sources of energy which a lot of people are working on as well. So there are a lot of trends which might change in the near future. So be very vigilant. You need to stay in a company which has a vision. It just doesn't have an ambition to grow. They should have a long-term vision. What if this happens? What if that happens? So you need to do complete analysis when you want to invest in these companies, right? Now, having said that, another sector which is really positive, when the crude oil prices goes down, is the paint sector. There are a lot of companies like Asian Paints, Nerolac, Berger Paints. These companies, and Kansai Nerolac, sorry. So these are the good companies where you could invest in. But again, look at the entire fundamental analysis. If you can't do it, let the fund manager work on it, right? And apart from that, the tire industry, the plastic industry, they also use crude oil as the raw material. So you have Neil Kamal, your Finolex pipes. These are good. But again, I'm not giving you any stock suggestions. I'm telling you, do your analysis. Things do change, and you need to work on that, because a trader works in a with a very different mind. They want to exit at the right time, and for that exit, also you need a lot of fundamental analysis, right? When the EV value is just high, you need to sell your stock. That's how it's done. So I never suggest people, and especially novice investors, I don't tell them to go for trading or do short term investment. No, stay invested for a longer time. That's my only thing. Auto sector, of course, after lockdown we might see in revival in that space for sure. Even Indigo, the airline industry, this drop in crude oil prices, like you have Indigo, you have SpiceJet, these industries, it's a very, very good news for them. Their shares, their profits can go up, because crude oil is the main raw material which they use when they are flying the plane, right? So that's one thing that you need to keep in mind. Just keep watching the commentaries, just keep watching, be vigilant, and that's how you could invest. I really hope you got your answer. Be very careful when you invest via ETFs, invest in stocks which are in this particular sector, but do your analysis well. If you cannot do it via ETFs, do it by other modes, right? And all the very best with your investments, Pulkit. I hope I did try to answer your question to the best possible level. Apart from that, I want to give you one, to all the investors here, I want to tell you that Franklin India, they have come up with 6 funds in particular, and they have decided they have now you cannot do SIP or STP kind of transactions in these funds. In a way closed it, and they're planning to liquidate these funds. And these are Franklin India low duration, Franklin India dynamic accrual fund, Franklin India credit risk, Franklin India Short Term Income Fund, Franklin India Ultra Short Term Fund, and Franklin India Income Opportunities, right? The problem is that foreign investors have pulled off the money and sold off the securities because they need money back home. So obviously, these funds, they were high risk funds, and they they actually were investing in papers and securities with low credit rating. And as I have always told you, that stay this is a time when you should not be taking too much risk. The other day also someone asked me that can I do positional trading and stuff. See, you can do everything you want, it's just that be very very vigilant. It's not that the people who would have invested in these funds would lose their money. No, they have a plan to give your money back. They will do that maybe after a year, after the macular duration. They'll do some weighted average things, and you will get your money back, that's for sure. But it's just that debt market scenario is also not very good, right? Because the prices are dipping and the yields are rising. So obviously, that industry is also, that sector is also suffering. So you need to invest wisely. You need to do vigilant asset allocation. That's what I would like to say. Do not go for many high risk things. Even Franklin India has decided to liquidate these funds because they were they were high risk funds, right? They had papers of low rating companies. So they don't want to stay in those companies, and they will give you money once it gets liquidated. And that is how mutual fund industry works. That's how transparent it is. You should take it in a positive sense and do not get disheartened by this news. All I would say is the people who would really suffer in this fund, whose money could get stuck in this particular fund, would be the people who would have done STP transactions using these. But it's okay, you will still get your money back. It's just that your money is little stuck, but you will get it once they liquidate it. But you could be rest assured that you would receive your money. That's all I would say. And on that note, I would say thank you very much for listening to me. Do not forget to subscribe my channel. Bye bye. Have a nice day.